The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody. This is the formerly very tired tax lady who has just completed another tax season. And we're here to make sure that we're going to move on to 2025. And we're going to keep you abreast of everything going on. And I'm joined in studio with formerly tired Christopher Fabian. Hey, Chris.
Hello, Esther.
And Tiffany Fabian.
Hey, happy Saturday.
Happy Saturday. And I pray that everybody has a wonderful Easter and Passover. And it's wonderful that we have these religious holidays that are kind of sprinkled in throughout the year that we can kind of go back and think about what's really important in our life, you know?
Yeah, I was telling that to my two girls yesterday about the important things in life, you know? And we just have to be reminded of that.
Yep, absolutely. So anyway, 8030930, 8030930, star 930 on the cell phone. You can't text us yet. Our text line is down. So darn it, we have to listen to your wonderful voice when you call in, 8030930, 8030930. If you are one of the, well, first of all, the IRS was down 1.7% returns. So, and we experienced a crush of humanity at the end like we never saw before. We did extensions after extensions after extensions, and a lot of people that we have in our processing center still haven't gotten back to us with their IPINs. IPINs are really important. Once you apply for an IPIN, we cannot file your return electronically unless you get us the IPIN. And we call and we text and we text and we call. And if you're one of our clients who we've been calling for your IPIN, you have to go online at the IRS to get your IPIN so we can put it in, right?
That's right. That's right. That's right. You know, an identity protection PIN, it's a 6-digit number that's assigned to you every year. It's not the same one year after year because that does no good. They send you a new one every year, like in December, or you can go online and retrieve it.
Now, people go online and ask the IRS to assign them an IPIN. So if you're not going to protect your IPIN and you lose your IPIN and you don't know what your IPIN is and you don't want to go back into the IRS to find out what it was, you are just shooting yourself in the foot. Would you not agree with that?
Oh my gosh, yeah, absolutely. You're holding up your refund.
You can't file.
You can't file. You're holding up your refund, and the thing is it'll carry on to the next year, and so you won't be able to file or get your refund for the following year, and so you're pigeonholing yourself. You're putting yourself in a little widget.
So here's the thing that you can do. If you've lost your IPIN, or you don't know where your IPIN is, or you forget what your IPIN is, or the one you gave us isn't the one that is valid, you can send in a paper return, but they will hold it up until they verify that you're actually you before they process that refund. So if you're somebody that has an IPIN that you've gotten before and we've been asking for it and you don't want to go online to get it, if you want to come into our corporate headquarters, we will go online with you to get the IPIN, but we can't send it electronically. Otherwise, it's a paper return, which could take 6 to 8 months to process.
Yep. There was one of my clients. Her daughter couldn't get the PIN, and so we sent 2 of the years paper, and so hopefully now this will resolve the matter.
Well, and here's the thing. It is really frustrating because with electronics, you have to do what electronics says to do. If the IRS says this is what we need and this is the way you have to do it, and you have to go online to do it, and you don't want to be electronic, I'm sorry, there's nothing you can do. You have to do it. It is what it is.
Yep, that's right. It is what it is.
It is what it is, and it really is sad because I watch many of my clients who are seniors who say, I don't have an email address. I don't use a computer. I don't want to use a computer. I get it that you don't want to. Mm-hmm. But you really kind of have to, especially if you're somebody with Social Security now and you've been looking at paper checks. They're going to stop that. They're going to only deposit it into your account as a direct deposit. These are things that you have to do. And I want to tell you, tax season ended Tuesday. So we're here for your income tax, and we're here to help you as a friend. And if you need help in these areas, please let us know because we will help you.
We loved helping people, and that's what it's all about, helping people.
Right, and especially, you see these seniors who don't want to. I don't blame them. I don't want to either, but you have to because that's what's happening. The world is moving on into electronics, and you have to too, or else you're not going to be able to function. And really, that's what happens is if you don't do what they want you to do, they just don't do anything. And so therefore, your tax return doesn't get processed. Your Social Security won't get processed. Things of that nature. And those are really important things.
Yep. Yep.
Right.
Want to talk to...
Okay, let's go to Alan, who's been waiting. Hi, Alan. How can we help you, sir?
Yeah, hi. I've got two questions, if I may. One's simple, and then the second one's a little trickier.
Okay.
The simple one, 529. My daughter recently finished grad school, but there's about $10,000 left in the 529. I'm the owner. She's the beneficiary. She may take a class or two, but can any of that money be rolled over into her Roth 401k without any tax
All
implications?
right, Chris, tell him.
Yes, it can.
Yay.
So tell him how.
That's a good...
You contact the holder of the 529 to start the process, and you have to tell them probably the agency you want to roll it over to.
Right.
And so-
and it ends up to be a tax-free event, and that's good.
Excellent. Okay, thank you. Okay, second question's a little trickier. So I'm 67 years old. I'm still working. I'm still covered with my employer's health plan. I am planning on retiring later this year. But with all what's going on with Social Security, I decided to sign up a couple of months ago. I got my first deposit of Social Security just last week. When they notification, they told me I was automatically enrolled in Medicare Part A.
Right.
I had forgotten about that they go 6 months back. Here's the problem. I had recently contributed to the HSA, and I understand that's a no-no once
Correct.
you
That's right.
are in
Right.
Medicare Part A.
Right.
So
You have to take
is
it out.
there a way to, because
No.
I'm still covered with my employer's plan, unenroll from Part A until I actually do retire a few months before to avoid the HSA penalty? And what are the HSA penalties? Because I contributed
There's
in February for tax year 24. I actually contributed in August of 24 for tax year 24, but they told me Medicare started in August of 24 because they went back 6 months.
There's a penalty every year until you take that money out. So you've got to take that money out ASAP. How do they calculate the penalty? But you got to take the money out, and I don't think there's any way to avoid stopping the Medicare.
Yeah, that
No,
one.
I mean, when you're dealing with the big agencies, the Internal Revenue Service, Social Security, they make you do the moving. They're not going to change for you.
Well, how will, all right, so here's the, between February of this past
And the
year and
penalty is
August,
6%, right?
I contributed $8,000 because I'm, that's the max I could have contributed. How will they calculate the penalty? Is it 6%, you said, or?
The penalty is 6% for over contributing. So take it
Okay.
out. I mean, it's,
Yeah,
just
but
take it
do
out.
I have to withdraw that? Because I'm using it a little by little. a couple hundred
No,
bucks.
you have to withdraw it.
Yeah,
can't-
you there should have been
overcontributed.
a penalty on your 2024
Right.
return for
Right. You
it.
should have computed a penalty.
You should have computed a penalty on your 2024 for it, and there's going to be a penalty on your 2025. You're going to have a penalty
Well,
every.
the IRS will probably mail you a letter saying you contributed to an HSA. You owe us this money because you were on Medicare.
Right, but I didn't know about when I filed the taxes for tax year
But
24.
what do they say? Ignorance of the law is no excuse.
What were you going to say, Alan? You
No,
didn't know.
You guys did our taxes actually, earlier this year.
Well, then that's easy. Just call us next week, and
Yeah.
we'll do the computation of penalty and go take it out.
Okay, but do I have to declare it because it's 8,000? Do I have to withdraw that 8,000 this year to avoid the penalty?
The sooner the better. Yes.
And obviously, if it's not for medical purposes, if I got to declare that, right, as
Right.
taxable income. All right, we'll figure it out.
Yeah.
Thank you.
All right.
Just give
if
us
you
a
need
buzz.
help, just call us. We're there.
All right, we'll do.
All right, thank you. I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 on the cell phone. And by the way, our friends in Florida have until May the 1st to file because of the wonderful hurricanes in Florida. So, again, we have our office on Airport Pulling in Naples to help you if you're a Floridian with an extension. The rest of us, we have completed that task.
Yeah,
And we're moving forward.
And one of my clients, I knew how to answer Alan's question a little bit because one of my clients, she was 66 and she put money into her HSA. So I did the form 8889 and it knew her age and it calculated the penalty. And so I just told her to take it out before the end of the tax year,
Right.
And
Absolutely.
so
All right, let's take a short
the
break.
sad part is that nobody lets you know at the HSA company. Okay, we're taking a
All
break.
right. We'll take a break. I want to tell you, to me, you are family. We had seen some of the most wonderful people this tax season. And probably the hardest returns I did were on April the 15th. I couldn't get over, and because they couldn't get appointments, and just the most wonderful people. We are so honored and blessed to have served you guys, and you have to understand, whether you are our clients now or you're going to be in the future, if you're getting a letter from the state or the federal, if you have a tax question, we want to help you.
Yep, most definitely.
Right?
We're there.
All right, let's go to Steve. Hey, Steve, how can we help you, sir?
How you doing? Parents' house. Dad passed away last November. The house was still in his name, so it's in probate right now. Just started this month. I guess it's got to be open for like 7 months. Someone suggested me when I sell the house, is it best tax-wise to leave the house and sell it in the estate name, or to wait till it goes in my name? I'm the son, and then sell it in my name. What's best?
Are you the
tax-wise
heir?
for me?
Are you the only heir?
What's that, ma'am?
Are you the only heir?
Yeah.
So
Yeah.
it's 6 of one, half dozen of the other. If you sell it in the estate, it's going to get a stepped-up basis, not going to cost anything. If you sell it because you inherit it, you're going to get a stepped-up basis. It's not going to cost you anything. Probably for expediency point of view, I mean, obviously, if you can get it sold in your name, then you can you don't have to do the estate return, and that makes it easier. But it's going to be the same answer either way.
Okay. All right. Thank you.
You're very welcome, Kevin. I'm sorry about your dad.
Okay. Thank you.
That happens a lot. Well, let's face it, people die. And you're not good at dealing with an estate. You never did it before. And so you don't understand what it means. So when you are a living person, the tax return you do is a 1040 form, right?
Yep.
But when you pass away, all the income that the money that you have left in your name is growing is done on a 1041, which is a fiduciary return. And so that would be income that the estate generates after the death of the person who had passed away. So, but the trouble is the 1041 pays at a higher rate than it would be at a 1040. In this gentleman's case, because he's going to get a stepped up basis, it's not going to be taxable on either end. So 0 is 0.
Correct.
That's easy.
Yes.
So anyway, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Would love to tell you you can text in, but our texter machine is broken here at BEN, so you can't text in. We have to hear your wonderful voice. Do you guys have any anecdotes that you want to share of tax season?
Do I remember tax season?
I mean, we did hundreds and hundreds of extensions.
Lots and lots of extensions.
And if you're one of our extension people, please don't wait till October. Let's get these things done now.
Right. But, one thing you brought, what we saw a lot, that's 3 years ago, people complained that there was no interest, right?
Oh, yeah.
And, oh, my God, I can't believe we're not getting money. Now, this year and last year, they started getting more and more interest on their tax return. And now what are they complaining about?
They owe money.
Yes.
Paying taxes.
They
on
made
it.
money and now they owe it. That's not right. Well, you didn't like it when you didn't make money. You got to take the good with the bad. And I'd rather have $20,000 in my pocket and pay $4,000 extra in tax. That gives me $16,000 more dollars.
Net profit, right.
I'll do that every day.
And I will tell you, interest rates are still fairly high. You can still do over 4% at many, many banks. So don't just give up the ghost. You shoot for as high of interest rate as you possibly can get.
Yes,
Right.
definitely.
All right, we have Mark. Hi, Mark. How can we help you?
Hi, Esther. Hi, friends.
Kevin
I am a happy EG Tax customer in Lockport with Sue and been there for many years. Yay is right. I have a question. I recently, this is for flexibility, I went from being a W-2 employee, this is just this last week, to a 1099 employee so that I can really do my own hours and kind of do the work, and my employer's fine with it. My specific question has to do with tracking mileage and, the log and that kind of thing. Could you kind of talk me through that? Because I do understand I can deduct my mileage for driving back.
Can I ask, did you say to your employer, I'd rather be self-employed?
Because you wanted
I
flexibility.
did.
Why?
I did, yeah, because I wanted to. You're making me question this, Esther.
Well, I mean, I because I think you have to understand what this means to you on a tax level.
The tax
So let's talk about it.
ramifications.
So do you have a lot of expenses that you incur?
Well, I talked to Sue about this. I mean, I'm counting on mileage, and I understand that I can do something with my home office.
Okay, so
By the way, can I just say one other thing?
how many miles do you do in a year?
Well,
that are
it's
your
one-
employer is not reimbursing you for the mileage, right?
Correct. It's 32 miles one way into the office, so roughly 65 miles a round trip to go to the office.
So the law, first of all, says you can't take the miles from home to that office unless you have an office and home. And so I'm so glad to hear that you do. So
Right.
that's really good news.
Right.
And could I just mention one other thing? I was contemplating, I don't know, I'm 68 if I decide to do this, of picking up another client or so. I do accounting work, and that would be one of the other reasons of wanting to do this on a independent contractor basis. But really, it's flexibility. Flexibility, which days I go in, when I work, that kind of thing is the reason I did it.
Yeah.
Okay, so your mileage deduction, how much, may I ask approximately what you make?
About $20,000 a year.
Oh, well, your mileage is $11,671. If you have a home office and you're traveling 65 miles round trip.
And you asked
So
about
then you only have about $9,000 left.
you asked about how to track it. So just get a mile log book, or
Or
there's
an app.
or there's an app. That's where I was
Yeah.
going to say, and track your starting miles, and you could also do your odometer on January 1st and see what that reads. And but that's how
So now
I'd approach
but
it.
you go into the office every day?
No. I should clarify that. I'm just going in. I've reduced my number of days in the office. I'm just going in 1 day a week.
That will be a big difference.
Big difference. Yeah, see,
Yeah.
because the thing is, the FICA that would have been borne half by your employer is going to be borne 100% by you, the 15.3%.
Yeah,
Now,
Sue told me
that's-
about that. Yes.
So that's one thing. The other thing is you can set up as SEP and you can put money into your own pension plan. So there's pros and cons. And
And then don't forget to deduct your Medicare that you pay as a self-employed health insurance deduction on Schedule 1, page 2.
yep.
Wow.
So there's
Yeah.
pros
Sue's gonna
and
help me with all
cons to
this.
being self-employed.
Yes.
But what people don't understand is all of a sudden you're paying the income tax and the Social Security at the end of the year. I hope that you do your estimate so that you're prepaying it so it doesn't bite you in the butt at tax time.
And then you could probably deduct a portion of your cell phone, your office supplies, portion of your internet, your mortgage interest, your property taxes, your homeowner's insurance, your utilities for your office and home, a portion of it. You take the divisor based upon the square footage of your house by the office and home, and that's what you use to be able to deduct a portion of,
Yes. Sue did cue me up about the making estimated tax payments.
Are you set up with that?
I know. I just started this week, and could you just kind of talk me through that?
Yeah, so call us and we'll send them out to you.
Okay, great.
Okay?
You guys are great. Thank you so very much.
Thank you. Bye-bye.
Yeah, and you could do estimates to the federal and the state,
Yep.
and
Right.
we'll mail them out to you.
So it could be 6 of one, half dozen of the other for him. But what's so sad is when somebody becomes self-employed, like they go, duh, why do I owe so much money? Right?
Yep.
And so that's why estimates are so important, because we don't want you to be sitting there next year saying, duh, why do I owe so much money? Anyway.
That's right.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. We're going to break for the news,
And
we'll
we'll
be
talk
back on
to
the other
Kev-
Hey, to us, you are family, and I will tell you, I just was so blessed by all these people that we saw all tax season, and if you're one of them, I just want to say thank you. It is such an honor to help people with something so important as their income tax, because they pay a lot of money, and it's just a blessing to be a servant, So I just wanted to say thank you. All right. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can't text us. The text machine is down. I don't understand how the text machine can be down, but it's down.
I think they switch software companies.
Okay. Well, anyway. All right. Let's go back to the phones. We're going to talk to, are we talking to Mark or Kevin?
Kevin.
Kevin. Hey, Kevin.
Hey, folks. Good afternoon to you all. I have two quick questions, but I want to help the gentleman who called about the mileage. Let him know wherever he goes, he can use Google MapQuest, which shows the distance and the, and the time and stuff. But also, there's an app called Car Data, which definitely shows your mileage a lot more accurately for tax purposes too. So just want to let you know.
Good
that's great.
advice.
Car Data, yeah.
Thank you.
Okay. Yeah, well, here's my first question. Will one be penalized by New York State, the Crumbling Empire State of New York, or the federal government if one doesn't take the health coverage offered by their employer and you're not going to the marketplace, or I call it the racket place either, for coverage? Because, geez, you wheeze, you go there.
You mean you're talking about health insurance?
Yeah, health insurance, yeah.
Okay.
If you decide you're not going to take it, will you be penalized? I remember one year when I was filing my taxes,
There was a penalty.
But they don't have any more.
They don't have it anymore, Kevin.
Yay. That was sort of remnants of the Obama era.
Right.
So that was something that happened through President Obama.
I mean, and we still get those those detailed sheets saying how much health insurance that they have paid in, the employers paid in, but it's no longer a penalty.
Yeah.
But
Oh,
I
no,
will
that's
say
okay.
this: I
Right.
talked to a number of people who I would say, and so how much is your health insurance? Because if they were self-employed, for instance, and they said, well, I have none. That is really a problem. The state of New York really bends over backwards to give people coverage, really, really inexpensive coverage, especially if you have modest income. So
Are you
no,
sure of
there's
that?
not a penalty, but the state
I
of
know it can be very expensive.
Yeah, it's income based, Kevin. So if you're if depending on the family size and how much you make, you might be able to get insurance for $20 a
20
month
bucks a month, right?
per
Okay,
person.
I'll have to,
And it's
okay,
better
yeah.
health
The right
insurance
place.
than what a school teacher has.
Right, better than what I pay a ton of money for every month.
Oh,
for
like
my
the ones
staff.
in a certain city, they can get their plastic surgeries. Anyway, I won't go there. But here's
And also, if you call our office, we have a wonderful healthcare navigator there. His name is Chris Moody, and he can help you with the racket plays.
Yeah, and so let's say
so
this
Chris-
very clearly.
Chris Moody.
Let's say this very
Okay.
clearly. If you don't have health insurance, at least contact Chris Moody out of our office so we can make sure that what's available almost free might be available to you. You cannot believe it, but the state of New York has all these plans for people that have modest income. And if you're operating with no health insurance right now, call us. We don't make a dime on this, okay? I'm
okay,
just telling
God
you.
bless you all.
Just want to make sure that you understand.
Oh, God bless you. You know what? Or else I could just come to the southern border and, well, you know what goes on there. But anyway, hey, here's the, well, not now, but anyway, here's the second question. Oh, gosh, be yourself, Kevin. Any word of when I'm going to get back some of my hard-earned money via that $5,000 check from the Department of Government Efficiency? What's the word? That's a big bird
You know,
on that.
it's
What's the word,
interesting
big bird?
because I've seen things that said 5,000, 1,000, 1,000 per person, 500 per person. So far, it's out in the wind.
Oh, man.
Out
No,
in the
man,
wind.
come on.
I guess I wouldn't be banking on it. If it happens, it happens. You know.
All right, I won't bank on it then. Okay, great.
Thanks,
Hey,
Kevin.
Thanks again, folks. So take care. God bless.
Thank you,
God
Kevin.
bless, Kevin.
God bless.
Okay, let's go to Keisha. Hey, Keisha, how can we help you?
Hi, I got a really vague letter from the IRS. I was supposed to get a $3,000 tax return from the federal government, which I was depending on. And they just sent me this letter that basically said, like, don't call us, we'll call you. Your return is on hold for 60 days. We're going to have no information for you. And I would have thought it was a scam if it didn't come from the United States Department of Treasury.
And you haven't received your refund yet for the year?
No.
Yeah. Did you go to irs.gov to check on the status of it?
And it's very vague. It says under review,
Okay.
like delayed.
Yep.
So, and if last year and the year before, there was all these identity letters to verify that you were actually you. This may be their new way of dealing with it, but
I mean, it could be that there's a letter on the way to you, a
Yeah,
different
that-
letter saying we need more information.
But if you need any help, just give us a call. We'll be very happy to help you. I know it's frustrating because you need the money. And that brings it to a really great point. When you have stockpiled all kinds of money that you've been sending into the federal government and then you do the tax return and they're supposed to send it back to you, think about that. You sent them money that you didn't have to send them, and now you're hoping they're going to send it back to you. Just change your W-4 so that you don't get those big refunds.
Hey, Keisha, was there any change in your 2024? Did you have a new employer? Did you go to college?
There was a lot of changes. So I was in law school struggling in New York City. So I've moved 3 times the past 3 years. and like I've taken money out of like a 401k because I was really struggling.
Yeah, because what
Like, so there have been a lot of changes.
Okay. Yep. And so that was part of my point is another thing that I have find when people's refund is on hold is that there's an employer who didn't report your withholdings, and so they have to do some investigation why your withholdings do not match up. And so I mean, you can testify to this, right, Chris? And so it's that the withholdings doesn't match up to what she keyed in.
Right. I mean, it could be all the moves you've done in 3 years too. That there's, wow, why would somebody move? This could be a sign of fraud. So you could be getting an identity letter.
But you can, like Esther rightfully, beautifully said, you can call our office and there's a practitioner priority line. We could do a conference call with you because probably you're a struggling law student. You would like your refund, right?
I mean, I'm an attorney now, but I still really needed the money. I'm just starting
absolutely.
out.
Did you do the college credit for lifetime learning? Did you do that on your return?
I exhausted all of that. I didn't qualify for it again.
No, lifetime learning is forever if you paid for school.
But it's limited by income.
It always says I don't qualify. I guess I should stop doing TurboTax.
Yeah.
Because when I moved out of the area.
Yeah. Or just have us take a look at it. Because Esther, she said she wasn't making a lot, so I don't think she made so much that she wouldn't have qualified. How much did you make in 24 roughly?
Probably 20, 30 grand.
Okay. And did you go to college?
I did for the last part of the semester.
Yeah, I think. I mean, there's no cost for us to.
Were
look
you
at
on
the
a
return.
scholarship?
Yeah, I did have a scholarship.
Yeah. So if there was nothing left, but here's the thing: if you these next couple weeks, we're still kind of dealing with all of the extensions that we've done. But come beginning of May, if you are still not experiencing any kind of satisfaction with the IRS, and by the way, I would call them, and like Tiffany said, you can call. We have a practitioner hotline. We'll be very happy to do that with you. There's no charge. Love to help you.
Yeah, I think it has to do with all the changes that you made in your life, which is wonderful, and congratulations.
Anyway, I'm Esther Golias, the tax lady from EG
So
Tax.
proud of you.
8030930, 8030930, star 930 on a cell phone. You cannot text us. The text line is down, but we love to hear your voice, right? We'd love to hear your voice. But here's the thing. If you're getting letters, those letters, you can do something about them. Don't just put them in a drawer. They require action on your part. And especially if it's an identity letter that says we want to make sure that it's really you, the IRS is trying desperately to head off all of the identity theft. So if that's your situation, and I know when you're 90 years old and you think, I can't use a computer, I don't want to go down to the IRS, and it's frustrating as all get out, but without you doing your part, they're not going to send you your money.
Right.
It's just so sad.
Yes.
I mean, we just wish whoever it is in Bangladesh that are trying to break into your account, if they would stop it, then we'd all be happier, right?
Yes. If people would use their powers for good, what a happy place this world would be.
Amen. That's for sure.
Well said.
I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on the cell phone. No texting, just calling. We got anything else here, Tiffany?
Oh, no.
Okay. All right, we're going to take a short break we're just going to take a short break, and we'll be back on the other side. Hey everybody, this is Esther Golias, the tax lady from EG Tax. If you're experiencing frustration, letters, don't understand, we had somebody yesterday that said that she hasn't gotten her refund for the last 3 years because of identity theft. Don't let that happen to you. Let us help you to unscramble the eggs, so to speak. Anyway, and I'm joined in studio with Tiffany Fabian, Christopher Fabian. I'm Esther Golias, the tax lady. Want to talk about Social Security because everybody's thinking that Trump is going to take away their Social Security, and he's not going to. He's not
Impossible.
going to take away your Social Security. But there are things about Social Security that you should know. And that's what I wanted to talk about.
Yeah.
Okay? All right. If you make too much wages before full retirement age, then you have to pay back $1 for every $2 you're over the $23,400 limit. So if you are under full retirement age, which is approaching 67 right now, you are limited to your income of 23,400 without having to pay something back.
Correct. Yeah, then
If-
you've got to pay back $1 for every $2 that you're over, which
And that's
is very
just
costly.
earned income. Like
Earned income. Good point, Chris. Good point.
that's working. That's not your bank interest, your dividends, your retirement. It's just your worth. You're still
Right, in other
working.
words, if you go to work, you're self-employed, then you're limited to 23.4 till you hit full retirement age. But you can make $1 trillion in the stock market, and it doesn't affect your Social Security. The taxability it does, but not whether you can collect.
Correct.
Okay, if your spouse passes away and they had the higher Social Security benefit, what happens is your Social Security benefit stops and you pick up your spouse's Social Security benefit. And so, and so you're missing out on your portion, but you would get the higher portion if that's what it was for your spouse. If you had the higher portion, then theirs would stop.
Yes.
Right?
Yep.
Make sure your personal information is accurate, like change of address, marital status, and income, and you should set up an online Social Security account.
Yep. I did, and then you get email updates, and it tells you all the status of what's going on with your account and with the Social Security Administration.
Right. And the IRS can garnish up to 15% of your monthly benefits if you owe back taxes.
Yeah.
So it really
It's really
is
bad.
It's really something to push you into getting this thing settled. And Tiff, we do offers and compromise all the time, right?
Yeah, one of your clients called me 2 days ago. He's a self-employed gentleman, and so it's just a great opportunity to get from underneath. It's a fresh start initiative, and it's paying pennies on the dollar. And it has to be that you are in a situation where it's doubt to collectability. So if you're somebody who is
And medical bills will do that to you in a heartbeat.
most definitely.
Okay, let's go back to Jim. Hey, Jim, how can we help you, sir?
Hey, Esther. I'm a tax preparer. I have a client who has had a lot of health problems in the past few years, and from one cancer to another. So she's trying to file. She wants to file for the last 4 years now. 2021 is completely gone. If she's getting a refund.
21, you actually have to May 15th. Because there was the
That
delay.
was COVID.
Yep.
Good question, Jim. Good question.
That's wonderful. And then 22, and 21, I'd have to do a paper, right?
Yes.
Right.
Yes.
And you file it.
Yes.
And then 22, the same, right?
22 can still go electronically.
Oh, it's still okay. Okay, wonderful news. Thank you. I thought
Really good.
I thought
That's
she
so nice that you
missed it.
care, and what a blessing it'll be for her to get the money, right?
absolutely.
Yeah,
she's
and
doing
then
better,
21,
too.
I would mail certified mail with proof of delivery.
Okay.
Yes.
Okay, sounds good.
Because
Thank you very much.
that's very
All right,
nice
Jim.
of you.
Thanks for calling.
Good
Thanks,
luck.
Jim.
It's so funny, during tax season, Jim reminded me, Chris tried to call NATP because they used to have a research department. I guess they got rid of the research department, right, Chris?
Yep.
That's National Association of Tax Preparers.
Yeah, and you can't call the IRS if you have a tax
You
question.
can't call the IRS. You can't call NADP. You got to call Ghostbusters.
There you go.
All right. The other thing is, if you're incarcerated for more than 30 consecutive days, you can have your Social Security benefits suspended. Not that we have people that are going to be incarcerated, but in the event that it does, make sure the application to apply for Social Security benefits are accurate, because inaccurate applications can result into a delay of you getting your Social Security benefits. And here's the thing: they aren't. You have to do it online.
Right.
All
I mean,
online
the Social
now.
Security offices here in Western New York
Or you
are closed.
You can make an appointment and they can call you and do it over the phone.
Right, but they're moving to all electronics.
Yeah. Yeah, we're looking up. Yep. Yep.
Okay. If you're deported as a non-citizen, or if you're guilty of marriage fraud, criminal activity, or falsified documents, the result can be a loss in Social Security benefits, and they will claw back what they paid you.
Will you repeat that? Will you repeat
If
that?
you're deported as a non-citizen,
Okay.
or if you're guilty of marriage fraud, you said you married
Oh.
Paul and you didn't, criminal activity or falsified documents, the result will be a loss in Social Security benefits.
Jeez.
Make sure your banking information is correct for direct deposit. They're not sending checks out anymore, kids. You have to have direct deposit. And if you're somebody that is you don't want to do this, come to see us. We'll help you.
That's right. Always ready to help.
All right. And the other thing is, if you don't have 40 quarters, get them.
That's right.
Go get a
I have-
part-time job.
I have a client, she worked for the post office, and she had like 35 quarters. She had 5 more quarters to go. So she's been working part-time to get her 5 quarters in. So then you can start collecting Social Security.
Yep.
You got to have 40 quarters, which usually is 10 years, in order to collect Social Security.
So smart of her. And it's a
Right.
great benefit. And so it's at your disposal.
Right. And then the other thing is, you can collect at age 62, or wait till your full retirement age, or wait till you're 70. But let's say that your benefits would be $2,500 a month. That's like $30,000 a year. If you wait those 4 years, that's $120,000 that you left with them. Right? And it's true, you're going to get a 32% kicker, but basically they're paying you for the money, your own money.
That's right.
You would be 82 and a half to break even.
Yeah, and there's a place on our website. It's a Social Security calculator where you can calculate how many years until you break even, and it's a really nice tool. I've used it a few times this year.
Right. If you're going to live to 85, that's great. And if you're going to be doing a lot of fun things between 82 and a half and 85, then I'm wrong. But I'm going to tell you, I would take the money up front.
Yeah, I mean, even if you don't need it, put it in the bank and you physically have the money.
Right. Absolutely.
Be-
I mean,
you know,
we're
because-
not talking about you don't have to need the money, but you should get it out of the system so that you have it. In the event you pass away 2 months after you start that you could have collected, they don't come to your spouse and say, "Oh, by the way, we owe you $110,000." It just doesn't happen.
Right. I mean, because why do most seniors do Roth conversions?
For their beneficiaries.
Why? Explain that.
For
Why
their
do they?
beneficiaries. So their
Oh, for their
beneficiaries
beneficiary.
don't have to pay tax on the money, right? So if
They're going to pay tax on the money.
not on Roths,
No, but she means
If they did a conversion from a
is-
right,
traditional to a
right,
Roth.
right. But what I'm saying is they're worried about their kids getting tax-free money, right? But if they were to collect their Social Security and put it in the bank account, the kids are going to inherit cash.
And that won't be taxable.
Exactly.
Anyway,
So-
I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can't text us. We would love to hear what you have to say. Do we have Jim here?
No.
No.
We answered.
Okay.
He was the tax accountant.
You know, and the gentleman earlier that called about the HSA with Medicare, definitely give us a call during the week. We'll do a conference call with the financial guys, health insurance, Brian Janik or Chris Moody, and we'll get that resolved for you because it may only be the time, we won't get penalized all year. It may only be the money that went in when Social Security kicked in for Medicare Part A, but there's a lot of stuff we got to unravel.
And the other thing is, if you're somebody that filed an extension, get it done as soon as possible, especially if you have an outstanding liability, because you may have avoided the failure to file penalty, which is really good, but you still have the failure to pay penalty and the interest. And obviously, if you want to get that done, if you want to avoid that as soon as possible, get that extension done. Filing, you do have till October the 15th, but don't wait that long.
No,
Right.
the
Especially
sooner
if you
you
have
get
an
it done,
outstanding
the
liability.
better. Yep, for the interest and
And
penalty.
I'm going to tell you, I don't know what the changes are going to be. I have a pretty good idea. I do think that they're going to lift that
Salt.
yeah, the salt limitation that is now $10,000 for New Yorkers. It's just, it hurts like crazy to watch somebody paying $18,000, $19,000, $20,000 in what would be deductible taxes limited to $10,000 on New York. I think that's going to be lifted. If they left the Social Security, you guys, we all should be dancing in the street because, boy, that is so much money that seniors shouldn't have to pay taxes on. I don't know about the tax and tip on tips. I don't know how they're going to figure that or the overtime. But the thing is, we listen to Ask the Tax Lady on Saturdays. As soon as it happens, we will let you know. We're going to have seminars. We want to make sure that you know how to maximize the benefit of these tax changes that are coming down the pike. And I do think they're going to come down the pike.
Yeah, I mean, we don't know. Even if they sign it now, will it be for 25? Will it be for 26?
Right.
What hidden stuff is going to be in there too is always a big thing to uncover too.
Yeah, and you know, we say this all the time. If you're at a place where they have a 401k plan and you don't sign up, shame on you. They're going to do a match, and you're missing that match. It's free money. You know, when you listen to a show like this, we're all about how to get you more money. Obviously, we want you to reduce your tax liability, but at the end of the day, it's like the person that ends up with the most money, not the least taxes, the most money is the person that's the smartest. And so we want to make sure that even though you might have to pay taxes, just like what Chris was talking about, when you can get, if you were getting $6,000 in interest and you had to pay $1,000 in taxes, you still ended up with $5,000 as opposed to putting it in a bank into your mattress. Those are the kind of things we want to teach you because we care. But in the meantime, if you have any letters, if you have any questions, you can call EG Tax at our corporate office, 632-7886. And until next week, I'm Esther Gullius with Tiffany Fabian, Christopher Fabian. We thank you so much, and God bless your Easter. Thanks for listening.